I will be confirming it to all of you by end of the day. Whatever the email address, whatever that has been given, we will be activating for all those email addresses by end of the day. Our team is already on the job. They will be providing you those data. So just wait till end of the day and you will be getting all the access. In the meantime, the market is literally like in falling off the cliff and it is keep on moving. Guys, those who already have an access, why you require 7 days trial? Because you guys have already, this is for the people who haven't even had the opportunity to try Y Pulse or One Click. Guys, we will be providing you all a discount code as well for all who wanted to avail the annual plan of Y Pulse and One Click. After the like in 7 days trial, we will give you that access as well, so that you will be able to make use of that. So beyond 1 year, currently we do not have any other plans, but there are people who have been buying multiple plans for multiple years. That can be done. Okay. Guys, if you wanted to access from two different emails, then you have to register and log in from two different emails and purchase the plan according to that. For One Click, you don't need to pay anything to the brokers except if you are using Zerodha. Zerodha charges 2000 rupees for the API, but all other brokers are absolutely complimentary. Yes, the regular charges of the broking, the transaction charges, the strategy rate charges, all those will apply, but there won't be any cost attached apart from Zerodha profile. Guys, the login for one week free trial will be trying to get activated today. So by end of the day, you will be getting a confirmation. I'll let you all know whether the plan has been activated or not for all who haven't tried OI Pulse or Monthly. Clear? And after that, don't worry. Yes, 25% coupon code would have got expired, which we launched it for our anniversary. But I will be giving you all a special code, which will give you 20%, 25% off for all of you. Okay. So now, today, one more thing to add. Like, guys, don't worry about the plans and other things. I'll keep you all informed in the group. Our team will get in touch with you. Don't worry about it. Upstocks is still not available. Guys, the 7 day trial, when I say it, it will start from today and it will end after a week. So don't worry. You will have like at least 4 or 5 days wherein you will be able to test it. Angel One is not available. ICICI Direct, currently we are working with them. Still, it is not Geojet, not we. You will have the list which is available. Don't worry, you can look at the list and then you can add your respective broker, whoever is available. Okay. Now we will move on to the topics so that we needed to cover a lot more. We will work on that and then we will do that. Okay. So people who wanted to try it today itself or who wanted to buy the plan, use these codes because some of you are already tried it, right? So you guys can use this. This is for OI Pulse. This is for One Click. Both will be applicable to the annual plan. I'll just send it across to all of you in the chat window. This is the promo code. Guys, those who may not be able to get all the concepts on the first time, do not worry. That's the reason we are giving you documents and everything. And also the user manual is available. You needed to keep going through that. Naturally, down the line, you will automatically get there. Okay. So far, we have connected down India VIX, OI Spurts, and then the OI Strikes and Futures. I will be covering it during the course of the session. So there is a question today. Okay. So as of now, the market is falling. Okay. Yesterday, what was the US markets did? What did the US markets did yesterday? it fell close to 100 odd points. It fell at one point of time. I think it fell more than 300 odd points. Our markets were on a break yesterday, and then it recovered and closed at 100 points. Today, if you look at it, all the Asian markets are trading flat. The Dow futures, which was trading at 50 points in the morning negative, is trading at flat territory. But our market is playing a different tune altogether. Our markets have fallen more than 180 points in the Nifty, 500 points in the Bank Nifty. So currently, the Dow futures is trading flat. How will you use this indicator to your advantage today? So, as a trader, today, is our market listening to mom? Guys, I'm not on mute. I hope you are able to hear me. Others, please. Others are able to hear, like, okay. Guys, our market is not even listening to mom today. So mom is saying like in typically we are like not happy or not sad, but our markets is saying totally a different tune altogether. Why is that? When you have more news on your domestic front which is getting dominated, on those days it will be very difficult for us to react to global news. When you have domestic news, say for example, you will have budget sessions, you will have special, what to say, a policy expiry announcement, the RBI policy announcement, and then we might have some one or two result announcements. On certain days, we might have like an analysis or like an any large stock which will have like a merger announcement. On those days, our market will react based on domestic cues more than the global cues. Today is one such day. Our markets is reacting to the domestic cues more than the global cues. How will we be able to identify? In the morning itself, you will be able to see the global cues will be like in flat to positive and everything, but our markets will keep continuing to fall with the volume. That is a sign that our market is not totally listening to any of the global cues, and we are going to be in a different territory altogether. That's exactly happening today. There are two things which is affecting us. What is that? One is the HDFC news, another one is like in the India-Canada tensions. Once the Canada announced that they are going to be like in sending one diplomat, our government said like, and we are also like in sending away one diplomat. What will happen? There is a large foreign institutional investment or the institutional investment coming from Canada. One is that Canada Pension Authority. They have close to, I believe, 100 lakh crore or something worth of investments in India that they would have deployed it in the market in different arena. So those, in case, if they are going to pull it back, there will be a huge impact, right? That is the reason that negativity is also getting into the picture. Once you have like an, what to say, country level, like in a it's more like in a war. Though it is not like in a directly we are engaged at war, it will be like in an indirect war which we are trying to engage now. Because the government is accusing other government that like and you guys were behind one of the citizens' death, and this is like not going to be a good news. So that is where the sentiment will get impacted. Okay, so when the sentiment is getting impacted, automatically all of these things tend to get have a huge say. That's the reason most of the stocks which is having like an under a hold of the, they will just go and look at all the stocks which is there in Canada Pension Authority, whatever the stocks that they are holding, you will see a major selling pressure coming on those stocks. And if it happens to be in Bank Nifty or Nifty 50, you will see a bigger impact happening because those are the one indexes which we are trading. So naturally, you will see that happening. That's the reason it's very important for us to track that. Though the Dow futures is rising, our market is falling, clearly a sign that we are looking at other parameters. And one more thing. In the last 1 week or so, what has happened to other things which we needed to track, like the dollar index, other things? If you look at the dollar index, I think when we were there, it was around 82.9 or something. Now it has gone to 83.24. It is again bearish for the banks and bank stocks. Next, the dollar index, which was trading at 103, 104, now it has gone almost to 105 odd levels. Brent and the crude, it's something which was trading at 85, 87, has already almost went up to 95, 96, in the verge of getting towards the 100 odd mark. More these things getting like in a rise, it's not going to be typically India positive. Why? Because typically when the crude goes higher and higher, the cost of like an imports is going to be higher. Naturally, our domestic cost of all the raw materials will go up and inflation will shoot, and that is all not going to be a good sign. That's a reason this is also going to be a negative factor for India in the short term. Okay, India in the short term. Now, both Nifty and the Nifty at least went above the 20K mark, did a new high, and then starting to fall. Bank Nifty, it went almost closer to the territory, couldn't hit that number, but it is starting to falter. Today, for some reason, if we are falling below this level and closing below this level, don't be surprised if our market almost reaches up to 45,000 in the coming days. Why it is very crucial? Because in the past, this is the area wherein the market took some support couple of times and then moved higher, and then the resistance when it wanted to go higher as well. So that's the reason that particular level will act as an important support for me. If that level is getting broken, then we may get to see some kind of an action happening on the downside. And clearly you can see the RSI effect is playing out on daily charts as well, right? It went above that 75, 77 mark. Now it is starting to cool off a bit. That's the reason you needed to be really careful with the RSI levels. I'll be giving you the RSI levels as well, how you needed to trade. Now, moving on to the next topic, which is on the IV, which is going to be very, very critical. If you are a buyer or a seller, this IV data is going to be very critical for me to look at it. Guys, don't worry. I will end of the session. I will tell you how to connect all the dots which we are learning. Okay. So first we will go individual concept. Then we will connect all the dots so that you will know how to connect all of them. Okay. First and foremost, look at the IV values here. Again, these values you wouldn't get anywhere. These are the values which I have tracked it over a period of time to know whether it is good, bad, ugly. How will I be able to identify as a buyer and a seller? Those days when I used to be a buyer, I never looked at the IV. Okay, what is IV? The implied volatility which I am expecting it on a particular strike. It is not VIX, it is IV, implied volatility. What is VIX? It is for the index, the Nifty 50 index. Here, when I'm talking about the implied volatility, I'm expecting it to be only on that particular strike. I'll just show you that. Can you see this? This is the column called IV. Okay, do you see this column? This is what we will be tracking now. I'll tell you how you needed to track, what are the things which you needed to observe, and how you needed to play based on this. First and foremost, why it is necessary for me to track the IV? The implied volatility will be giving me strength to know which side the buyers are, which side the sellers are, and which side the buyers is expected to move the market, and which side the sellers are expected to control the market. And how will I know whether a buyer or a seller is going to be dominating that particular direction? How will I get a clue? All those things can be used by knowing the IV. What is the difference between a VIX? There is a correlation between the VIX and the IV, but I will tell you how you needed to use it. If VIX goes high, what does it indicate? VIX is different, IV is different, intrinsic value is different. If VIX goes high, it is bearish, correct? If IV goes high, what does it indicate? Anyone? It's not bullish or bearish. How will I be able to identify a particular side as more buyers or sellers? If the IVs keep on moving higher and higher, that means the buyers are coming in. If IV is going lower, it is dominated by the sellers. Okay. Now, why we needed to be tracking IV? Otherwise, as a buyer, this is only for the index options, not for index futures, guys. The IV is going to be tracked only for index options. You can look at for the stock options as well, but you won't get a fair value. I'll tell you the reasons, but use it only for the index options. We are going to be tracking the IV only for the index options, not for the stock options. Clear? IV going up means buyers coming in. IV going lower means the dominated by the sellers. Now, yes, this is like and mostly for intraday only we use it. If IV is trading at 0, what does that mean? If IV is trading for a particular strike, it is at 0. What does it mean? Look at this. There is no IV here, 0. There is no premium. There is no premium in that strike. That means as a seller, you will not be able to make any money. Buyers will be there, but there won't be any premium for the sellers to make money. Clear? Now you guys have understood the 3 things. If IV keeps on going higher, what does that mean? The buyers are coming in. If IV is going lower, it's dominated by the sellers or the buyers exiting the position. It can be 2. Here, what can be coming in? Now, are you able to get this point now before we move in? I'll tell you the range and other things. Please first understand, if IV value, beginning of the day, IV value is around for a particular strike, 10. After some time it goes to 11. After sometimes it goes to 12. After sometimes it goes to 13. That means buyers are coming in. Clear? But after that 13, it comes to around 11 and then 9. That means either sellers creating more positions at higher levels or buyers exiting the position. Clear? We will go this thing. Guys, I'll again tell you, I'm just explaining you, if IV goes higher from 10 in the morning to 11, 11.5, 12, 12.5, 13 for a particular strike, that means buyers are coming in or the shorts are covering their position. From 13, the IV is starting to fall. That means at the higher level, the sellers are creating the positions or buyers are doing a long unwinding. I'll just show you in a chart itself, then you guys will get to a clue. What is a clue here? This is a chart of 45,000. I'll just show you for 45,700. This is your chart here. Do you see this? This is your IV chart. This particular column which you see is the IV chart. What is this? This is the IV chart of put. This is a put, like in a call IV chart, put IV chart with the price and everything. So that you will be able to understand how it is going to be doing it. Morning, the IV on this one, when it was around 191, the IV was around 15.8. Do you see this? IV 15.8, the value in the bottom. IV value. As it is moving lower, what is happening here? IV from 15, the value is like in slowly moving towards 9, 9.5, 10. Here it is around 9. What has happened from the price? Price has moved. It moved to almost 55 odd rupees here. The high was 86 on this candle, moved to 56. What is it indicating? Is it dominated by the buyers or a seller? It is getting dominated by the sellers. Why? Because as the price goes lower and lower, sellers are creating more positions. When the sellers are creating more positions, IV will go lower, price will also go lower. Are you with me? When the price goes lower, IV goes lower, that means clearly sellers are creating more position. Now, IV is again starting to climb from 9.0 to almost now 14.58. But can you see what has happened here? The price is still going lower and lower, but the IV is going higher. What is this? What is this? Someone is trying to buy some positions. Why would someone buy 45,700 when the market is trading at 45,400? For this guy to make money, you know what? Where the market needed to close? It needed to close above 45,715. What is happening here? It a short covering plus. Can you see this? The OI is coming down from a high of like close to 90 odd lakhs. It has come to 82. Shorts who have been like entering into their position, they are covering it. Now they are also adding at the lower position. Imagine as a buyer, what we guys used to do. We are all buyers, right? Like in what we used to do. When a particular price has fallen from 200 rupees to 10 rupees or 15 rupees, people keep on going and doing an averaging, keep on buying everything at the lower level, thinking that there's going to be a sudden reversal. How many of you would have done that mistake? We all do that, right? As a buyer, what we do? We go and buy the low cost product which is available at a cheaper price. We think that this is very cheap and these guys are fools. I will go and buy it. But unfortunately, this is the way to lure you. When I know that particular strike needed another 400 point move to make this money, there is all these buyers who are buying it are all fools who, if you are like in doing a naked option buying, then you are like in buying a lottery ticket. If you are hedging your position for your put trade, then it's a different ball game. But if you are just buying it naked, it's a big gambling. This is the reason we needed to track the IV. On the other hand, this is your put trade. Morning it was 100, okay? And look at the IV here, 14.76. Can you see what has been happening? As the price is moving higher, can you see the IV levels here? The price was around 120 and then the IV also like went up to like 18, 18.5, 18.7. The price has moved from 120 to 250 odd levels. And then look at this. What has been happening with the IVs here? What is the IV clue which you are getting it? As the IV is moving higher and higher, what are the thing telling you? Either the buyers are coming in or shorts are covering their position. What was the OI here? 50 lakh. And what is happening with the OI now? 14 lakhs. So is it buyers coming in or shorts covering their position? Are you able to see the correlation? How beautiful it is? Now, at this level, can you see the IV here? IV was around 27. Now, what is the IV level? 24.94. The price is not moving higher. The IV is falling. What is happening here? Is it the shorts exiting or longs exiting the position? Yes, short covering is also a boy. Clear? Longs exiting the position. Longs are exiting. Only when the longs exiting the position, you will see the IV crash happening. Long unwinding. Yes, long unwinding or long liquidity, whatever it is, that is how you will get to see the IV crash. Clear now? You understood the concept of how the IVs move? If the IV goes higher, that means the buyers are coming in or shorts are covering their position. If the IV is going lower, that means the sellers are creating more and more position, and at the same time buyers are also exiting the position. But the same strike, if the IV is again spiking, that means someone is coming in and buying it at a lower level, thinking that it is going to give them the profit, buying a cheaper premium. They are thinking that we will buy this at 10 rupees. What if the bank nifty suddenly reverses 300, 400 points? This 10 rupee can go to 100 rupees. They are just buying it in a hope. Imagine there are some smart sellers, they will be hedging their position. What is the hedging? If they are selling what to say, like in a deep in the money strike, they will go and buy a OTM strike. That is exactly called as hedging. When the IV is trading at zero, that means there is no premium left in that particular strike. So there is no point in calculating the implied volatility. Clear, guys? With an example, I have shown you how the IV is moving lower and how the IV is moving higher. And here how the price is moving along with the IV. Now, what is the clue as a buyer? This is something which I will tell you. When you see a IV crash along with the price happening, don't try to go and be a buyer. Don't try to go and be a buyer, because that is where the buyers are exiting. Imagine this guy has bought it at around 100, 130 odd levels. It has gone to 400 odd rupees, and they would have carried, all the buyers carried. Can you see this? Whenever you see a sudden spike happening, you will see a big spike happening in the IV as well. Why? That is where one buyer coming in, every buyer will flock in. Everybody wanted to go and buy that. That is the reason you will see the price going higher, IV also going higher. The OI is falling big time. Okay, that is how it is. Now, after a high 397, currently it is trading at 340 to 360 odd levels, almost 40-point drop. You can see the profit booking happening. Whenever a profit booking is happening, that is the area you needed to be really careful. Don't go initiate fresh buying. So Shiva, like in this scenario, where will I go and buy it? In case if I wanted to buy a put, you know where I will try to go? I will wait for a bounce and I will look for the futures chart to see whether it is coming near to the resistance area of the WMA or the super trend, and then go and initiate fresh short positions. I wouldn't be there to buy here or put. I would wait till here and here for me to get a support trade. Okay, IVs can only give you a clue. It cannot give you the entry levels. It can tell you whether the buyers are coming in or whether the sellers are coming in, and so on. Here, more and more buyers coming in, the sellers will be happy. Why the sellers will be happy here? Tell me honestly. They will allow the OI to keep on increasing. Can you see this? The OI here was 82 lakhs. Now it is close to 87 lakh. 5 lakh got added. IV is coming higher and higher. That means there is someone who is coming in and buying these levels. They are saying, Shiva, these guys, like in already I sold it at 13. I will let it go some more price and then keep selling it at higher levels. I will keep selling it at higher level because I'm not expecting this index to go another 300, 400 points. The buyers are coming in and I needed to trap them. I will allow them to come in, let them create the positions, and then I will suddenly bring down the price. These guys will start to lose. When the IV crash will happen? What is IV crash? Many people would have told you this, right? What is IV crash? IV crash, IV crash. You would have heard about this term. Will the IV crash only happen because of sellers creating more position? It is a combination of two things. IV crash will happen when the sellers bombard a particular strike, okay, with heavy selling. Plus longs who have been having expectations, and they also unwind the position. Longs unwind massively. When these two things happen, you will see the IV crash. So what is IV crash? Typically, before the event, the option prices will go higher. Option prices will go at the money will trade at around 600 odd rupees. At that time, the IVs will be around 40. Why the IVs needed to be higher? Because at the money which was supposed to be trading at 100 rupees, it's trading at 600 rupees. There is a lot of buyers who are coming in, buying the particular strike at whatever the price which is available because they are expecting 1000 point or 2000 point move in the Bank Nifty. But after the event is null and nothing has been announced. Imagine if it is before the budget, on the day of the budget, once the budget announcement and everything is over, there is nothing exciting in the budget. Immediately, the buyers will exit the position. Sellers will add more and more quantity because there is nothing exciting. They wanted to maximize the use of the 600 rupees, which is available at the money. Immediately, you will see the prices crashing to 200 odd rupees, IVs crashing to 20s. It is a combination of prices falling plus IVs falling. So that is how the IV crash normally happens. So I'll just show you an example as well. This is 2022 budget. Can you see the IV levels on this one? I think IV is not shown here. One sec. Okay. Can you see the IV levels here? What is IV level? When I say IV level, look at the IV level. You needed to look from at the money 3 strikes above and 3 strikes below. Always look at 3 strikes above, 3 strikes below, and then the median. The median you can just consider 35.64. Here 37. Which side the IVs are higher? Which side the IVs are higher? 35 here, 37 here. So where exactly the buyers are more? The buyers are more on the put side compared to the sell side. Okay, that means buyers are dominating the side, sellers are dominating. So if I am a buyer, I need my IV to be higher. That way, I can expect more and more buyers to be coming on my side. And in fact, the market also closed with a put. So 37, 35 at the money strike, trading 700 rupees and 600 rupees. This is one day before the event. You think that it is one day before the event. Do you wanted to know what has happened? I'll just show you that. I'll just show you this. Can you see what's happening on the IVs on both the sides? What has happened to IV? One day before the event, we are seeing it. I think there is a trade available near to the super trend. Guys, be careful. The Dow is recovering and there is like a huge fall has happened. And now they have made like a new low. This is the new low. What is the time? Just look at it. I'll remove this line. I think this is also a line. This was at around 10:24. This is around 12 o'clock, right? Okay, let's see what time they are going to be making another round of one. Did I not give you a clue about this particular one? What is that? What is the chart? Ah. What is happening now? The IV was crashing. Again, the IV is jumping. Why the IV is jumping now? Did I not give you that clue where I would be coming in as a buyer? Where? Are you able to correlate the chart with the IV now? So, people like me, what am I waiting for? I'm waiting for the IV to crash, and then once it goes near to the super trend, I'm looking for a resistance. What I will do? I will buy a put. In that scenario, what will happen if I buy a put? Can you see this? IV spike is happening from almost 17.7. Now it has gone to 22. Is it a beautiful concept? Are you able to get the correlation now, guys? How the IVs play a role as a buyer and a seller? Now, coming back to this example, I was just showing you the example one day before and one day after. This is one day before. The IV levels before the budget was around 35, and at the money was trading at 700 rupees and 600 rupees. And then after the event, these guys were not even getting anything what they wanted it. And you see the prices falling crazy. The prices are falling, and then can you see this? At the money is trading somewhere around 200 odd levels with the IVs crashing to 26. How beautiful it is, right? Yes, when the buyers are coming in, the IV will spike. Now, they came, again they are trying to go higher and higher. Next, where exactly I can expect a little bit of a resistance? Where exactly I can expect a little bit of a resistance? Imagine if I'm a one lot player, I can only enter a trade here because already the super rejection trade is done, and then they are trying to go up higher because the global markets and everything is on a pressure. Now, in case if the market is able to break the super trend and go above, please be careful. Please be careful. Because the next resistance is little far off. Then you needed to have a large average from 45,500 to 45,670. That means 120, 130 odd points for you to average a position, because that is the nearest level wherein I can expect some kind of a resistance to come in. Okay, so don't be in a hurry to enter your positions. Imagine I'm entering here. Okay, I'll just go to 45,700, 325 odd levels. If I'm entering around 100 quantities here. Okay, what I will do is every move towards this territory, 100 here, 200 here, 400 here, 800 here. That's the way I needed to plan my trades. Okay, because on a trend day, you won't get an entry opportunity as a scalper. You won't get an entry opportunity as a scalper. But data is suggesting me, Shiva, the data is absolutely today is bearish. You are making a new low. They have been writing more and more positions on the put call side compared to the put side. They have not added anything. And one more clue which you are getting is trading very much below the VWAP. So use every opportunity. As a seller will definitely try to defend that level at least once. I'm going to be playing for that. But what is the reason for it to bounce from here? What is the reason for it to bounce from here? That clue also they gave you that. There it is. Now can you see this? The premiums are crashing or no? Something which was trading at 120 rupees and 130 rupees as a premium at the money and in the money, the call discounts are coming down, and then the put premiums are coming down. Is it not beautiful? Now, what I needed to do as a smart player, I needed to wait for every bounce. Every bounce, I will try to add some positions. Perfect, guys. Now they have broken the super trend. Every move on the upside, I will use it as an opportunity to sell. So the positions which we got at 328, now it is trading at 342. So, though if I'm entering full quantity here, I may not be average my position here. But since I'm getting a profit, what I normally typically do on a trending day is try to trail whatever the profits which we are getting it. So next time, if I'm getting another move towards a higher level, I will use that profit as my stop loss for the next trade. So that way you will be keep on compounding your profit, whatever that you got it. That is the only way you will be able to make money on a day like today. Because it is going to be a tricky day. Why I say tricky day? Our domestic cues are like and really bearish. The global cues are getting bullish. On this kind of a day, don't try to be over aggressive. Try to like and put all your quantity because when the gap is pretty large. Imagine if the VWAP is here. Okay, I could have entered like in close to 1,000 odd quantity here, 1,000 odd quantities or 2,000 odd quantities here, take the position. But when you have a large gap, you needed to play a large role. Averaging is an art. Don't try to deploy everything. When I'm explaining you the risk calculator, I'll show you how you needed to do the average, what will be the pyramiding range and other things. But don't try to put all your entire quantity one place. Wait for every level. Where exactly I will enter the maximum, this is the level. Because this is the level wherein they pumped in the money to take this market lower, right? This area and VWAP. So if you look at it, it is very much closer. So this is the area wherein we can expect the maximum resistance to come in today. Clear? That is the area wherein I would be looking for. Since it is already in profits, let's just try to block something and then we'll concentrate on this session. Okay. Now, we have seen the IV values, how it is being shown before and after the event. Normally, typically, the IV values will be very high whenever there is a major event coming in. What are the major events? During the budget times, during the election times, during the RBI policy times, on all those days, you will see the IV values. If it is like, and say, for example, the event is today, if you go and look at yesterday's IV values, all those will be higher. Why? As the event is headed, people will be buying a lot of stuff. Imagine I might be thinking that like in the present government may not win, the next government is going to be a new one, and I will be buying a put. Whereas you will be thinking that the present government is going to continue to be there for 2029 or whatever it is, and you will be trying to buy the call. So there will be like in people who will be buying a call, there will be people who will be buying a put, they all will be betting something. But on the day of the result, imagine if it is going to be a hung assembly. We do not know who's going to come into the power. Then both the sides will fall because the buyers and sellers, buyers on the call side, buyers on the put side, both will lose the money because nobody is going to come on power on a full majority. In that particular scenario, the highway crash will happen. I'm just giving you an example. It is all like an hypothetical example which has been given. So I'm not saying this government is going to come, that government is going to come. Let's not get into politics. Our job is to identify where exactly we will be able to make money. Okay, so focus on that. Yes, even for a scalping, we needed to do averaging and everything. It's not like an as if like in the scalping can be done with one entry and then exit with the same candle. No, sometimes I will be trying to do a pyramiding. When I say averaging, it needed to be on both the sides. Now, this particular position, we closed it at 255. Can you see this? We bought it at 328, went up to 340. Now it is at 340 or 341 odd levels. It is not moving higher or lower. But where exactly I will add more position? Since this trade has played out, I will look for one more bounce if it is there. Or if they're breaking this level and then making a low, then I will. What is the time? 12 o'clock. By 1 o'clock, what they needed to do? Keep it in your mind. Okay, all these things typically needed to play. So by 1 o'clock, they needed to typically make another low in case if it is going to be a trending day. That is how we will be able to identify whether a guy who is bringing in the money in the morning, whether he's going to typically take the market lower. Clear? Now, IV values, this is for today. Usually on expiry days, you will like an earlier when you look at the NSE website, you won't get the IV values because anything which is trading above the intrinsic value, the IV values will not be shown. Typically that happens. Look at this, it happens here. Now, all these are like in a strikes which is trading at like in a crazy. Okay. Don't worry about it. Like in most of them are trading in a premium because of like crazy move. Okay. So typically on expiry days, we normally don't look at the IV values. I'll just show you one day before. Okay. No, let's look at Nifty now. Nifty is having an expiry tomorrow. What is the IV values on the call side? What is the IV values on the put side? From at the money, three strikes above and three strikes below. 12.91, 12.73, 12.91, 13.3, 14, 14.95, 16, and 17. Okay. The average would be somewhere around 14. The average would be somewhere around 11 if you can overall calculate it. So I would consider the median here 14 on the call side, 11 on the put side. 14 on the call side, 11 on the put side. Today, the market is falling close to 184 points. IV on which side is higher? Call side is higher. Is it good? Is it good? Market is moving lower, but call side IVs is higher. Is it good? There is a possibility of people are buying call position thinking that the market has fallen 180 points. From here, it doesn't going to be crashing. I will go and start taking the calls, buying it. Typically, this is a trap. Typically, this is a trap. Never ever consider an IV being higher and then going and buying it unless and until the market is also in that particular direction. If the market is trading 180 points plus and IV is on the call side is also 13, 14 and IV on the put side is 10, then it is a perfect buy. Today is a contra. Market is falling. IV on the call side is higher. Put side is lower. That means they have already stolen one kidney of yours. They are waiting to steal your second kidney. Yes, it is like hedging. That's fine. But looking at this, what many typical traders would do, they will think that the market has fallen. I will go and buy it. Now you tell me, based on OI spurts data, already it has fallen more than 50%. The OI has jumped more than 50%. Typically, it is with who is having it? The control is with the short sellers here. Here, the price has moved more than 20, 30, 40% here, and the IV values are around 10, and OI is also jumped. Typically, it is with the buyers. The only catch point here is if the IV on the put side is low, I will again slow it down. If the IV on the put side is low compared to call side, what is it clue giving you? As the market is falling, sellers are still creating more and more position. They are not letting it to fall. The prices will keep on be there. You wouldn't be seeing significant price rise. You wouldn't be seeing typically like in a large price rise happening on the put side. Why the IVs are low today on the put side? Can anyone say? The answer is here. Can you see this here? In Bank Nifty, we saw a different picture. In Nifty, we are seeing a different picture. Puts are in discount, and at the same time, calls are in a premium. So typically, calls are in premium. When the market is falling, this is a perfect opportunity, right? Here, they are not letting the prices to go higher. Here, they are not letting the prices to go higher, creating more and more positions. What they will do is they will keep on doing this, and once they make another round of and gap down tomorrow, the buyers whoever bought it today, they all will exit in a loss. They all will exit in a loss. This is how they typically trap the buyers. Earlier, I never used to see these IVs. Without looking at the IVs, I used to make lot of losses. Now, I'll go into the chart, explain you the IV levels. Now, what is the typical IV level which is very good? Whenever the IV levels are around 10, 10 on both the sides, 10, 10 on both the sides, you wouldn't have much of premiums. When the IV levels keep going higher and higher, the premiums are also going to go higher. If the IVs are going to be staying lower, the premiums are also going to stay lower. Lower the premium, better for the buyers. Why? Because you are not going to be buying a product at a much bigger cost. Something which is needed to be sold at 100 rupees might be available at 110 or 120. Then typically I will be able to ready to buy that. But imagine if it is going to be available at a large cost, then we may not be able to make money. That's the reason low IVs is always very good for the trend play. Okay. Why it is good for the trend play? Imagine if the market moves, low IV example. Today, you are buying 45,500 put. Something which is trading at, say for example, the market is trading at 45,400 now. Spot price is 45,400. 45 put is trading at 150 rupees with the IV around 10. Just think that it is not an expiry day. Okay. IV is around 10. If the IV is for the same strike is around 30, you will see the same option trading at 350 or 450. Okay, it is again based on demand and supply, but usually this is how it will be working. If the IV is around 40, the same strike will be trading at 650. If the IV is around 60, you will see the same strike is trading at 750. If it is trading at 90, you will see the same strike trading at 950. So typically, higher the IV, higher the premium you will see. When you will see a higher IV? Only when the VIX spiking. This is the only correlation between VIX spiking, IV will spike. VIX fall, IV will also fall, both intraday, positionally. Why? Why the VIX spiking, IV will spike? Because naturally, when the VIX is moving larger, you are going to be expecting a large move on the index. Naturally, the seller who is creating a position to safeguard his position, he will command a better premium. When he is commanding a better premium, naturally, you will see a higher price happening. So he's saying, guys, if you're ready, come and buy the same strike at this particular price. Today, that guy is selling it at this price, 150. But in a high IV and IVIX environment, the same strike will be getting traded at 900 or 800, and the IV levels would be around 80 or 90. Higher the IV, the only reason is the sellers are trying to protect their position. Imagine if the bank nifty is going to move 2000 rupee point, 2000 point in a single day. If I'm not going to be commanding now 900 or 1000 rupees, it will be very difficult for me to safeguard my position. That's the reason they will say on those days, guys, I'm going to be commanding this price. If you're ready to buy, come and buy it at this particular level. Now, on a low IV, why it is good for me? Imagine if it is a low IV, if the bank nifty moves from 45,400 to 45,100, automatically this one will have to be moving towards 350 or 450, sorry. Why it is? The reason is it has to be calculated based on the intrinsic value, right? What is the intrinsic value? 45,500 minus 45,100, it is 400 rupees. Plus whatever the premium that needed to be paid for this 10 IV is around 50. If it is going to be on expiry, what will be the level at which it will get closed? It will get closed at 400 and IV will be 0. Clear? So whatever the time value which you are seeing, that is also going to get reflected in the IV along with the demand and supply. Along with the demand and supply. It's easy to understand now. Now, if it is an IV value, I will tell you this example as well. Guys, just go through this example again, you will understand better. This is the low IV environment which I explained to you. Now I am showing you the same one with an IV example. IV is trading at 450. Okay. By end of the day, today is the expiry, market is closing at 45,100 or 45,000. What will be the level at which this one will close? Low IV is good for the buyers or high IV is good for the buyers? Based on the two examples which I shared now. Low IV is good for the buyers. High IV is like, typically the market will move, but you will not get a large move if the market is not moving towards this territory. Unless and until this guy is like a not move it here, it is going to be very difficult for you to make money in a high IV environment. But what is the challenge in a low IV environment? You needed to get a trend play. Can you see today, typically, how much each of the premiums, or like an say for example, how much is the money would have been made by the buyers on the put side? 400%, 500%, 600%, 700%. Why? The market is giving you a trending move. Just see the other day. Just see on Friday, on Monday, okay? Can you see what has happened here? It's a low IV. Both the sides lend 10. Both the sides 10 and 10, almost 11 and 11. Correct. Typically, whatever the example which I have given. But the premiums didn't move. Premiums started falling on the call side, but they didn't move at all on the put side. Are you able to see the difference? Why I mentioned low IV is good for the trend play? Clear, guys? We needed the low IV because as a buyer, you will be able to make the maximum when there is a trending day happens. When the trending day happens, you will be able to make the maximum in a low IV environment. Now, we will go on to the next example. 20 and 15. Okay, imagine the one side is around 15, another side is around 10. Premium erosion on high IV if the market is against the trend. What is the market trend today? IV is here around 10, IV is higher around 13. 15 and 10, premium erosion on IV if the market is against the trend. Which side the IV is higher? Typically on the call side, around 14, 15. Here it is around 10. Clear? The expiry is tomorrow. The market is moving lower, but the IV is higher here. Can you see the amount of premium which is getting lost? Close to 140 rupees on at the money strike. Now, what will be happening here? This side the premium will erode, but due to low IV on the other side, you will not see a bigger premium move here. So typically, as a buyer, if the index is not moving much from here, these guys are not going to be making any more money. These guys are not going to be making any more money. Are able to understand the correlation? Which side the IV is going to be higher and so on? We will look at the next example. If the IV is around 18 and 18, 20 and 20, 22, 22, 24, 24, when you have similar kind of an IV level on both call and the put, what is the IV levels on both the call and the put? 8, 8. It is very low. On this particular day, the market moved 46 points. You got only 10 points. Here, they taken away 33 points away from you. Typically, in a low IV, if you're not getting a trend play, only the premium erosions will be happening. Only the premium erosions will be happening. Can you see this? It's only like in a small premium move. I'll just go and show you. I think these are all low IV environment. I'll show you a big one actually. Wait. Somewhere in March. Even here it is very low. Anyway, I have some examples. I'll show you that. Don't worry. I just wanted to see it here. I think whatever that you guys have been witnessing this year, it has all been like in a low wicks, low IV environment. Typically, if you go and look at the VIX levels in March, also the IVs would be very, very low and VIX will be very, very low. I'll just show you examples which I have it. Just give me a second. Okay. Okay, so typically this is like in from the NSE website, which I used to collate it way back in 2018, 19 odd times. So look at this IV levels actually. On this particular day, the market was in fact falling. The IV on the call side is around 47, IV on the put side is around 60. The only catch point is higher the IV, you won't get the premium. As I explained to you in the example, if the IV is higher, though the market has fallen 150 odd points, the premiums on the put side will not increase. Higher IV is a problem. Higher IV will always be a problem. So it is not going to be a typically a good one. Okay, so please be careful thinking that higher IV will be very good for the buyers. Higher IV will be always be good for the sellers. Sellers who are saying like, and we are struggling at this hours and everything, it is purely because of the low IV environment. Because typically they won't be able to get anything for them to sell. Always the sellers thrive in a high IV environment. They are not going to be having enough fun in the low IV environment. Clear? Now, this is one example. I'll just show you one more. Can you see this? 59, 60 odd levels and 80 odd levels here. The market has fallen big time on this particular day. The market has fallen big time on this particular day, close to 1,000, 2,000 points. This is on the Bank Nifty. And typically, you're not getting to see a much bigger premium here. So typically, what I would ideally say is, if the IV values are above 40, it's better to stay away from the markets as a buyer, or you needed to be a smart short straddle player. When I say short straddle player, typically you will sell both call and the put and expecting the premiums to erode by end of the expiry. But it's going to be a very tricky one. If someone who's not comfortable playing a short straddle in a high IV environment, typically please stay out. Okay. The best thing is that can happen to you is you needed the IV to be higher on the side at which the market is moving. Today, imagine if the market is moving on the downside. I would love to see the IV on the call side being 15, IV on the put side being 25. Even 7 or 8 point difference is also fine, but typically we needed to have a large gap between the call and the put. And most importantly, IV should be higher on the side wherein you see the direction happening. This is how the IV needed to be tracked. If it is 10 and 10, low IV is good, and you needed a trending move for you to make money on that particular direction. But for some reason, today, the IV on the call side is higher, put side is lower, and the market is falling. Typically, you will lose a lot of premium. High IV is a double-edged sword. High IV is a double-edged sword. It can give you a large reward when the move is in your favor. It can take away plenty of money if it is against you. If it is against you, it can take away plenty of money away from you. Now, what the market is doing now? Can you see what has happened now with the premiums? Almost all the call premiums have got reduced. Now, typically, these guys are like reducing these levels. What I'm trying to do, I'm entering into a trade. Why am I entering? On what basis am I entering now? What is the reason for me to enter? One is the premiums have crashed. Next, still the trending over is suggesting me, Shiva, like there is a massive call writing which has happened there. which is going to be giving me a push. I'm just going to be using every opportunity till it rises up to the VWAP for me to create maximum positions. Clear? So, though I have around 20 lakhs in this account, I'm not even deploying 1 or 2% of my overall capital. I wanted to deploy this 20 lakh. So what I will typically do is, I will wait for every bounce for me to keep adding the position. Clear, guys? Do you get the confidence as the market is moving higher? Do you get any kind of a confidence here that this market is wanting to give you the profit or like making a move? No way. So typically that is the level wherein I wanted to keep adding positions. So we have around 540 odd quantities as it went higher, but I would typically wait for this and this level to average my positions to the maximum. So this guy has fallen more than 4%. Almost every bank is in the red except Axis and SBI. These are the two guys who are giving the little bit of support, but I am just going to be waiting to take more positions. I'm buying a put. Guys, I'm buying a put. Can you see a strike which I'm going to be taking? I'll just show you the chart as well. The strike which we have taken is 45,700. I'll just show you the chart. What am I trying to do here? I'm trying to play for a support trade. Which support trade I'm trying to play for? I'm trying to play for the VWAP support rate. The VWAP is somewhere around 200. Typically, this one is somewhere around 300 odd levels. It has fallen from 400 to 300. The IV values is falling. What is it typically telling me? When the IV values are falling on this particular side, what is it typically telling me? The buyers who were here, 27, they're all exiting the position. The IV values have come down to 19. But I'm gaining some confidence. Why am I gaining some confidence? Because on the future chart, it is heading near to the resistance area and I might be getting one opportunity for me to make money. And I'm not buying an OTM strike. I'm playing in the money strike. Market is trading at 45,400. Typically, I'm playing at 45,700. And how much is the premium left on this one? 24 rupees. Is it not a safe bet? Even if I lose, how much is the maximum I will be able to lose it? If the market is exactly closing at these levels, I can only lose 24 or 25 rupees out of this trade. So don't go and buy an OTM. Always try to play for an in the money or at the money. And typically I normally use 300 to 400. Clear? If the market is exactly closing, only challenge for me is if the market is keep on moving it higher. But looking at the data and everything, this is your 45,700 data. I'll just show you the individual data as well. From morning, these guys have added from 38 lakhs to 93 lakhs. This is 45,700. Here, from 32 lakhs, it has gone to 13 lakhs. Always think the options market from a seller's perspective. Always think from a seller's perspective. What the buyers have done it here, they have continuously bought. They are squaring off the position because from 148, it has went to 390. They would have made enough money. Now the longs are unwinding the position. I am trying to buy it from the weak longs. Why am I trying to buy from the weak longs? I still see the sellers are not covering their position. Only when the sellers show their weakness, I needed to be careful here. Till the time, I will be happy. Till the time, I'll be happy. Are the sellers showing any weakness? No. The buyers are coming in here. But do you see this? Is the buyers giving you any kind of confidence here? Is the price moving significantly higher? No. So typically, whatever the price at which we bought it, is this giving you the profits? Yes? No. Yes. So I would ideally wait for me to create some more positions in case if it is going there. Now the only challenge is I wouldn't be able to average all my positions here. I needed to wait till this level. This will be my final area to enter into my put trade. Okay, this is the final area for me to enter into a put trade. Till that time, I needed to typically wait. Is it giving you the opportunity? Every rise is an opportunity to sell this market. And what they are doing now, can you see? They're just making a bounce from almost 280 to 90 to 320 odd levels now. Good. So what are the factors which I considered? Leaving out the global markets, what are the other factors which I considered for me to go for the scalp? So we entered this quantity at around 306 odd levels. Now it went to 320, again back to 315. And look at this, we just needed to pyramid it. From 300 to 36, we are just buying on the go. So if we are waiting for a right trade, looking at the IV values and everything, is it not giving you a perfect clue to enter and make money? Absolutely yes. Why would I needed to track these IVs? IVs will give you a good clue on certain days whether it is going to be a sideways day or whether it is going to be a bullish day, whether it is going to be a bearish day, or whether it is going to be giving you a massive move on your premiums or not. So typically today, looking at the IV values, on expiry day, we normally don't look at the IV values, but you just tell me, looking at the IV values for a day, what you would have done. Okay, I'm going to be posing some questions so that you guys will get better idea. 11 on the call side, 13 on the put side. Is it ideally good now? Yes, it is a live market. Which side the IVs are higher? IVs are higher on the put side. The market is also falling, which is a very good sign. That means the buyers are coming in. So all the buyers like me who were waiting for an opportunity, what we were waiting for? We were waiting for the IVs to go higher and also the options premiums to come lower. Now, typically all the premiums are trading in. Isn't good? Is it good now? Anything trading in the discounts? No. This is how I needed to use the IV values to my strength. Now, there are days wherein you will see the IV values typically both the sides 20-20. What I will do on those days? Those are the days wherein we needed to understand it is going to be a day wherein they are going to be only eroding the premiums. There is not going to be much of action. There is not going to be much of action. I think they are playing out in this particular territory. They are not letting it go higher or lower because of this factor. So as long as the Dow is going to be giving you a closer around like in a 15-20 or like in a positive, they're just going to be typically heading towards a VWAP territory. But anyway, we will see. Wait and watch. Wait and watch. There is no hurry for us. As long as this particular arena is not getting breached with volume, I will use every opportunity to make some entries. I'm just entering few more quantities here because it is making a head towards the territory. Guys, the most important conviction which I am having based on the data is this. Though the longs are unwinding, on the other side, I'm not seeing a massive interest which is coming in to take this market higher. This is 45,700, the strike at which we are trading. Imagine if the longs are unwinding on one direction, we normally needed to see a short covering happening big time here with a large price moves happening. If it is not, it is typically saying the sellers are still holding the front. Still the sellers are feeling I will be able to take this particular strike to zero. That is the clue what that they have been giving you. Okay, so that's the reason I'm still hoping and taking some positions at every level at 300, 290, and so on. I would typically take more quantity as it is going here. That's exactly I'm looking for. Wait, wait, wait. You may not be able to punch in all your quantities, but even with this, imagine even with this, with a 20 lakh capital, with a deployed capital of 3 lakhs, almost you are close to getting your 1% more. Okay, you are close to getting a 1%. Imagine if you are able to get one good trade like this, then your day should be done completely. Your day should be done completely. Can they not? I'm just adding few more quantities here. Because typically they are not able to move beyond this range and they are just like in playing around in this territory. Can they head towards this ground? So, why would someone be defending this level? Now you tell me. Why would someone be defending? I'm just thinking and playing based on the big player's mindset. What am I going to be doing it? If someone has pumped in so much of money to bring down the market, and if his average is here, will he easily let it go? I don't think he will do that. He will protect it at least once to try to bring down the market. I'm just playing based on that guy's mindset more than anything. So that guy is the most important guy in your life now. You needed to think what this guy will be doing. So if he is losing his money here, then we also don't have any other option other than to lose our money. But if this guy is not like, and if he is like in protecting it, we will also lend them little bit of an hand by shorting this market or buying a put at these juncture. That's the way I would typically do it. Now, almost it is falling big time now. What is happening? The price is moving big, big, big on the downside. This is the area. It is almost coming to my zone. Correct? I'm going to be adding more and more quantity here. This is the area wherein most important averaging would be done. And I'm just doing that. And I'm keeping my stop loss somewhere around 227 odd levels. And can we see this? That was the hourly like in a high. What was the previous low? It was at 12 o'clock. The level was somewhere around 45,500. Now they are bouncing towards 45,600 odd levels somewhere around 1 o'clock. In the next few minutes, by 1 o'clock, if they are not making a new low, is it going to be a trend day? At least not. At least not. This is the area wherein they needed to make that move. If they are not making it, then we may not be able to see a trending day. We will see that. So from almost 20K loss, we have added the quantity. Now it has come to almost 7 or 8K profit. Now what I'm typically going to be doing is, as it has given me some favor, once it is coming lower, in case if I'm going to be in like 20K profit again, I will book off of my quantity and retain the remaining. That's a typical way to do that. Let's see whether they're going to be getting it. The most important thing when you are playing with a plan, don't panic. Okay, you know these are the levels at which they are going to be playing for, and wait for those levels to play out. Don't be in a hurry to buy all your quantity here. Buy in a hurry here. That is the area wherein we know a maximum resistance can click in. I'm also looking for that 1 p.m. move wherein typically they needed to make a new low. Whether they are going to be doing it with a large candle or not, that is something which we needed to see. So HDFC Bank, 4% down, ICICI is 0.5%. And if you look at it, in the last 1 hour or so, it is mostly Kotak and ICICI which has been making the move along with the SBI. So other than that, all other banks are still in the red in the last 1 hour. So these are the three guys who are pushing up as much as possible. But if you look at overall structure, HDFC single-handedly taken 500 points on the Bank Nifty lower. Now, this is 45,700. Are you still getting a fear over here? I'm currently still not even like looking at this because they are still adding more and more positions here. They are not letting it go, which is clearly suggesting these guys are still expecting this market to fall lower. Imagine if the market is going to be keep moving higher, what will be the first reaction of these guys? The writers on 45, 600 and 700, they will all be covering their positions big time. This is how they will be able to shake the weekends as well. This is how they will be able to shake the weekends. Either be a buyer or be a seller. This is where they will be trapping them completely. Now look at the chart. This is your premium. Almost from 120 to negative. Now both the sides, the premiums are at 60. So typically what the writers have done, they have brought down the premiums, adjusted the premiums in smart way. Now they are having it both at the same level. Here, 20-25 lakhs have got reduced, but they didn't add any significant quantity. It is all the same. Around 2 lakh 60 in the last 45 minutes, and it is the same. Looking at the charts here, this is your 45-700 chart. Where exactly a bigger support is expected on this one? Somewhere around 200 odd levels, bigger support. Again, the IV crash happened, and people like me who are buying it now at the lower level, again the IV is starting to move up. Here, though the premiums are moved from 13 to 18, the OI is not coming down. They are going to be using that as an opportunity to sell again. Will they be able to bring it down? Typically towards this level. $287 odd levels. If it grows above the 290 mark, 295 mark, we will be able to pocket some money, and then we will trail the remaining ones. So buyers are using every opportunity to take towards the resistance zone. Let's see whether they're going to be successful in that. We'll just give a few more minutes to see how it plays out, and then we will move on. Somewhere around 281 odd levels. I'm just looking for that 1 p.m. move, whether there is going to be a massive move to prove that, yes, I'm going to be hitting a new day's low, or I'm just going to give up for the trending move, and then I will look forward for tomorrow. We'll see whether who's going to gaining that particular area. If you're a one lot player, the only opportunity is going to be taking a resistance trade is going to be near to the VWAP. So already it is moving beyond that level. So what we will do? We will keep it at around 292 odd levels. Once it crosses the 295, I'm going to keep it there. Can they go there? That's something which I will be looking for. Nope. They're just going to be playing for the 290 odd levels. We will give up some 500 quantities here. $298. Oh no, it got triggered. It's okay. So we got around 41K on that particular trade. How was the trade? Did we take a large risk? Did we play according to the plan? Did we look at all the data points? Whether the data gave you the right clue? One good trade is enough, right? Again, we didn't deploy a large capital. We are still waiting. We had close to 16 odd lakhs, which we could have deployed it here. Typically, this is how a trade need to be completed, looking at all the parameters in place. Do you see the correlation now? Again, the IVs are dropping. If the IVs are dropping, the prices will not move higher. It will get stuck over there. But what has happened to the premiums here? From it went from 13 to 18, now it is making a new low. What they've done? From morning, they would have taken one kidney. From 13 to 18, they're luring you to come in. Now they are taking your second kidney as well. That is how typically the sellers will do in case if you are going and getting caught in their direction. Is it beautiful now? How many of you feel that this is slowly working out the way you wanted it? I know many of you would have taken a trade in spite of me telling you don't do don't mimic my trades and other things. Guys, please understand. It'll take some time for you to get to the level where I am. That's the reason I'm not forcing or rushing you all to take the trades. Okay, please don't be in a hurry. Yes, it'll be very difficult for the small players to get into an entry at this levels, but I will definitely let you all know. On that note, we will take a break and then we will be back.
Recording stopped.